Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock. With news, all signals point to high inflation and lower growth, and bond markets are scratching their collective heads. The global economy's recovery track seems to be faltering as the combination of rising inflation and supply chain bottlenecks is undermining consumer confidence in their future buying power, from Japan to Germany. Delta isn't helping the mood either. In the US, it's touch and go. American consumer price inflation came in at 5.4% in September, marginally higher than for August and slightly above what was expected. Core inflation, that's without food or energy costs, was unchanged at a rise of 4% in the year to September. These rising costs so far are more or less keeping pace with the weekly income gains of 4.6%. It is uncertain whether the US Fed will stay patient or will get aggressive now on how it deals with inflation. The Fed minutes show that central bank policymakers have plans to begin reducing their bond buying stimulus program next month and will aim to wrap up these asset purchases entirely in the middle of 2022. China turned in a very strong export result in September, up 28% from August and very much better than expected. It was also a record high. That led to a strong $67 billion trade surplus for the month, $42 billion of which was with the US. China ran a 9.1% deficit with Australia and a $500 million deficit with New Zealand in September. But new loan growth in China rose in September from a weak August, but much less than expected. Perhaps that was more robust than it first seems, as lending into their large property sector is a clear restraint on their overall levels. Property development may take up as much as 30% of China's economic activity, so to get any growth with that sector under a cloud is actually quite impressive. German inflation came in at the expected high level of 4.1% in September, similar to August. In Australia, the new incoming New South Wales Premier is signalling that the state is about to go on an immigration bender to catch up some of those numbers we've lost over the pandemic, he says. He seems to have his eyes on technical construction and healthcare skills. The US Treasury 10-year yield opens today down another 3 basis points at 1.55% as other markets lack direction. But the price of gold has moved up smartly today, up $33 to $1,794 an ounce. But oil prices are essentially unchanged and still just on $80 a barrel in the US, while the international Brent price is just on $83 a barrel. And the Kiwi dollar opens today just marginally firmer at just on 69.6 US cents. Against the Australian dollar, we're little changed at 94.4 Australian cents, and against the euro, we're marginally softer at 60.1 euro cents. That means our trade-weighted index starts today little changed at just on 73.3 and still in the middle of the 72 to 74 range of the past 11 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.